Welcome back to the Crypto Strategist, everyone, your home for the latest crypto updates, market analysis, and XRP news. XRP holders, we need to talk because today's developments have the entire market asking one major question. Do we finally have a deal, or are we still waiting for the final piece of the puzzle? Right now, XRP is showing remarkable resilience, and that's something investors should not ignore. After a period of uncertainty that sent shockwaves through both crypto and traditional markets, XRP managed to erase a significant portion of its losses and stage an impressive recovery. While many traders expected fear to dominate the market following geopolitical tensions and economic uncertainty, XRP had other plans. The price action has been sending a message that many investors are beginning to notice. The market may be nervous, but XRP continues to fight back. That doesn't guarantee immediate upside, and it certainly doesn't eliminate risk, but it does show that buyers are still stepping in during moments of weakness. As we move through today's breaking developments, we're going to examine the potential deal everyone is talking about, what it could mean for crypto markets, why XRP is attracting attention again, and why the next few days could be extremely important for investors. Earlier in the day, XRP experienced significant volatility as global markets reacted to reports surrounding tensions involving the United States and Iran. Investors quickly moved into risk-off mode as uncertainty spread across financial markets. During the sell-off, XRP fell sharply and tested a major support area that many traders had been watching closely. What happened next caught the attention of market participants. Instead of continuing lower, XRP found buyers at support and began climbing back. That recovery became even more impressive when compared to other major digital assets. Bitcoin recovered as well, but XRP's rebound showed greater strength. This type of relative performance often sparks discussions among analysts because strong recoveries during periods of fear can sometimes signal underlying demand. Markets are emotional by nature, and when uncertainty appears, prices often overreact. The interesting part is not necessarily that XRP fell, it's that buyers were willing to step in and absorb that selling pressure. That tells us that confidence has not disappeared from the XRP community, even after months of frustration and sideways action. The market may still be cautious, but XRP's response today has given traders something worth paying attention to. Another interesting development was the performance of XLM, which emerged as one of the strongest movers in the crypto market. Many investors immediately started looking for explanations, and some reports pointed toward developments involving major financial infrastructure discussions that sparked renewed interest in certain blockchain projects. While today's spotlight remains firmly on XRP, it is important to understand that strength across related digital assets can sometimes indicate improving sentiment throughout the broader sector. When traders begin allocating capital into projects connected to payment systems, settlement technology, and blockchain infrastructure, it often signals a willingness to embrace risk again. That does not automatically mean a massive rally is around the corner, but it can suggest that investors are positioning themselves for future opportunities. XRP has long been viewed as one of the leading assets in the digital payments space, so positive sentiment surrounding similar projects naturally creates more attention around XRP as well. Whether that translates into sustained momentum remains to be seen, but market participants are clearly paying attention to these developments as they evaluate where capital may flow next. Now let's turn our focus toward the economic data because this is where the story becomes even more interesting. Recent GDP figures came in below expectations, creating fresh concerns about the strength of economic growth. Investors had hoped for stronger numbers, but the reality was somewhat disappointing. At the same time, inflation-related indicators continued showing signs of pressure. This creates a difficult situation for policymakers because slowing growth and persistent inflation rarely make decision-making easy. When inflation remains elevated, central banks become more cautious about lowering interest rates. Many market participants had been hoping for rate cuts that could provide additional liquidity and support risk assets such as cryptocurrencies. However, stronger inflation readings make that scenario less likely in the near term. For crypto investors, this matters because liquidity often plays a major role in driving market sentiment. Lower rates generally encourage investment in higher risk assets, while higher rates can have the opposite effect. The market is now trying to determine whether inflation pressures will ease, or whether policymakers will remain forced to maintain restrictive policies for longer than expected. One of the key inflation drivers that investors are watching closely is energy. Oil prices have become a major variable in the economic equation, and recent geopolitical developments have directly influenced those prices. As uncertainty increased, oil moved higher, adding to concerns about inflation. However, reports suggesting progress toward a potential agreement between the United States and Iran immediately sparked a reaction in energy markets. Investors began considering the possibility that oil supply concerns could ease if tensions continue to cool. lower oil prices would be welcome news for both consumers and policymakers because energy costs influence countless areas of the economy. If energy prices begin moving lower, inflation pressure could gradually decline as well. That would create a more favorable environment for financial markets, including crypto. The relationship between oil, inflation, and digital assets may not always be obvious, but these macroeconomic connections are incredibly important. Sometimes the biggest catalyst for crypto isn't found inside the blockchain industry itself. Instead, it comes from broader economic trends that affect investor confidence and risk appetite across the entire financial system. The biggest headline driving today's conversation revolves around reports that negotiators have reached the framework of a potential agreement involving a ceasefire extension and continued discussions. According to reports circulating through financial media, the proposal includes extending a ceasefire period while broader negotiations continue. This is not being presented as a final peace agreement, and that distinction matters. Many investors initially hoped for a complete resolution, but the reality appears more complex. Instead of a permanent solution, negotiators may be pursuing additional time to continue discussions and reduce immediate tensions. Markets often react positively to reduced uncertainty, even when a final agreement has not been reached. The reason is simple. Investors generally prefer predictable environments over unpredictable ones. If a temporary arrangement prevents escalation and allows negotiations to continue, markets may view that as a constructive step. However, because this remains a developing story, traders are staying cautious. The details still matter, and the market knows that negotiations can change quickly. That uncertainty is one reason why volatility remains elevated across multiple asset classes. One critical factor investors should understand is that reports of a deal do not necessarily mean a deal is finalized. Markets have a habit of celebrating headlines before all the details are confirmed. At the moment, many participants are carefully watching for official approvals and signatures that would transform reported agreements into binding commitments. Until that happens, uncertainty remains part of the equation. This explains why traders continue reacting to every new update. A favorable headline can trigger buying, while a disappointing development can reverse sentiment just as quickly. The market is essentially pricing probabilities rather than certainties. That dynamic creates both opportunity and risk. XRP investors have seen this pattern before. Major developments often generate excitement, but sustained price movements usually require confirmation and follow-through. While reports of progress are encouraging, experienced investors understand that patience is still required. The next 24 to 48 hours could be especially important because additional information may either strengthen confidence in the reported agreement or introduce new questions that markets will need to process. Among the reported elements of the proposed arrangement are provisions designed to ensure uninterrupted commercial shipping and reduce tensions surrounding key trade routes. These details matter because global commerce depends heavily on stable transportation networks. When shipping disruptions occur, supply chains suffer, costs increase, and inflation concerns intensify. If trade routes remain open and secure, markets generally view that as a positive development. Investors quickly recognize the potential economic benefits. Reduced shipping risk could help stabilize energy markets, support global trade, and contribute to a more predictable economic environment. For crypto investors, these developments may seem distant at first glance, but they influence broader market sentiment. Stronger economic stability often encourages investors to take on more risk, which can benefit digital assets. This is why macroeconomic headlines frequently impact cryptocurrency prices, even when the news appears unrelated to blockchain technology. Financial markets are interconnected, and developments in one area can create ripple effects throughout the entire system. As discussions continue, another major topic remains at the center of the XRP story: regulation. Few issues have had a bigger impact on XRP over the years than regulatory uncertainty. Investors have spent years watching legal battles, policy debates, and shifting regulatory interpretations. While significant progress has been made, many market participants argue that true clarity has not yet been fully achieved. Regulatory agencies may provide guidance, but legislation creates a stronger foundation because laws are generally more difficult to reverse than administrative interpretations. This distinction has become increasingly important as lawmakers continue debating digital asset legislation. Investors want certainty. They want to know the rules of the game and how those rules will apply moving forward. Every step toward clearer regulation reduces uncertainty, and markets often reward certainty. That is one reason many XRP supporters remain focused on legislative developments. They believe a stronger legal framework could unlock opportunities that have been delayed by years of confusion and conflicting interpretations. The conversation around regulatory clarity has gained additional momentum due to statements from government officials emphasizing innovation and technological advancement. Many leaders have acknowledged that previous approaches toward digital assets created friction between regulators and innovators. There is growing recognition that blockchain technology and digital assets represent important areas of economic development. Supporters argue that excessive uncertainty drove entrepreneurs and investment opportunities away from the United States. As a result, policymakers have increasingly discussed creating frameworks that encourage innovation while maintaining consumer protections. For XRP investors, these conversations are significant because they influence long-term adoption and institutional participation. Large financial institutions typically prefer operating within clear regulatory environments. The more certainty exists, the easier it becomes for institutions to explore blockchain-based solutions and digital asset integration. While policy discussions often move slowly, the direction of these conversations matters. Markets are constantly trying to anticipate future developments, and regulatory progress remains one of the most closely watched catalysts in the XRP ecosystem. Many XRP supporters believe that legislative efforts aimed at creating comprehensive digital asset rules could become a defining moment for the industry. The argument is straightforward. Regulatory guidance can change depending on who occupies leadership positions, but legislation establishes a stronger and more durable framework. That permanence is attractive to investors because it reduces uncertainty surrounding future policy shifts. If comprehensive legislation eventually becomes law, many believe it could remove a major obstacle that has weighed on crypto markets for years. Of course, passing legislation is rarely simple. Political disagreements, competing priorities, and procedural delays can all slow the process. Nevertheless, supporters remain optimistic because momentum appears stronger than it has been in previous years. Whether that optimism proves justified remains to be seen, but the market continues watching every update closely. Investors understand that meaningful regulatory developments could influence not only XRP, but the broader digital asset sector as well. Meanwhile, there is another fascinating aspect of the current market environment that deserves attention. While traditional markets have continued demonstrating strength in many areas, cryptocurrencies have often struggled to keep pace. This divergence has led to intense debate among analysts and investors. Some argue that crypto remains trapped by regulatory uncertainty and risk aversion. Others believe the sector is simply undergoing a prolonged consolidation phase before a larger recovery. Whatever the explanation, the gap between traditional asset performance and crypto performance has become difficult to ignore. For XRP holders, this creates a challenging emotional environment. Watching other markets move higher while crypto remains under pressure can test patience. Yet history has shown that markets often move in cycles. Periods of underperformance are frequently followed by periods of strength. The question investors continue asking is whether the current environment represents a warning sign or a setup for a future comeback. That answer remains unknown, but it is one of the most important debates happening in financial markets today. Recent data also suggests that many retail investors have been taking profits in other asset classes. Profit-taking is a normal part of market behavior, especially after strong rallies. When investors lock in gains, they often reallocate capital into new opportunities or simply reduce exposure to risk. Interestingly, despite selling activity from certain groups, major stock indexes have continued showing resilience. This raises important questions about liquidity, institutional participation, and future capital flows. Could some of that capital eventually find its way into digital assets? That is a possibility many crypto investors are considering. Historically, capital rotates between sectors as investors search for value and growth opportunities. If sentiment toward crypto improves, even modest shifts in capital allocation could have meaningful effects on market prices. XRP supporters are watching carefully because increased participation from both retail and institutional investors could create powerful momentum if conditions align. Another reason XRP remains in focus is the growing belief that the project could benefit significantly from improved regulatory conditions and broader institutional acceptance. Over the years, XRP has built a dedicated community that continues emphasizing its potential utility in cross-border payments and financial infrastructure. Whether one agrees with every bullish argument or not, there is no denying that XRP remains one of the most recognized digital assets in the world. Recognition matters because institutions tend to gravitate toward established networks with significant liquidity and market presence. If the regulatory environment continues improving and adoption efforts expand, XRP could find itself in a stronger position than many critics currently expect. Of course, optimism should always be balanced with realism. Markets are unpredictable and no outcome is guaranteed. However, the combination of regulatory progress, macroeconomic developments, and renewed investor attention has created an environment where many market participants believe XRP deserves another look. As we bring everything together, the central question remains the same: do we have a deal? The answer, at least for now, appears to be yes, but with conditions. Reports suggest progress has been made, negotiations are continuing, and markets have responded positively. However, important steps still need to occur before uncertainty fully disappears. Investors should remember that headlines often represent the beginning of a story rather than the conclusion. The coming days could provide additional clarity regarding geopolitical developments, inflation trends, regulatory progress, and broader market sentiment. Each of these factors has the potential to influence XRP and the wider crypto market. For now, XRP has demonstrated resilience, buyers have shown up when it mattered, and optimism remains alive. Whether this becomes the foundation for a larger move or simply another chapter in a volatile market remains to be seen. One thing is certain, XRP holders have plenty to watch.